Hello, welcome back. I'm with John Feneck, portfolio manager and consultant. John, good to see you.
You too, Peter. Thanks for having me.
No problem. I thought it made sense. We're both going to be in Zurich in November, and I wanted to have a bit of a warm-up conversation before we actually sit down together in person. At the moment, obviously the market's a bit rough, especially in the gold space, but in the junior space in general for mining
Sure.
companies. I just wouldn't mind getting a little bit of a pulse on where you're seeing where we are at the moment in the current cycle.
Yeah, to address that disconnect, when you look at the price of gold and how well it's done this year, and I know am at odds with certain people that think that gold hasn't done very well this year, but I mean, when you look at a print of over $1,900 an ounce for 5 months or so in a row, by the way, consecutive days, that's never happened in history, right? So when did that happen? It happened after the financial crisis in March. So what you're seeing is a new floor put on gold as a result of the Silicon Valley BS that happened, right? And that price point to me is 1790 to 1800 an ounce. We've been saying that since January at Zurich. We've been saying it's not going to break all year. It really came close to testing that, if you remember, right before the Israeli conflict, and then it bounced real hard, right? Like, so people are watching these levels. So, as a technician, I'm always saying to people, Peter, that you have to watch the technicals. They really matter because big money is watching this. I'm a small fish compared to a lot of the institutions that are watching these levels. And so if you're not paying attention to that stuff, it's really hurting your performance potentially. I'll give you another example. 16.15 an ounce gold happened last September, October, right? And then it tested it 3 times. And then what we said, slingshotted higher, but $400 plus an ounce higher, right? It broke 2,000, if you remember, to the upside on really good volume. So I see a similar move setting up right now where gold is probably going to hold that 1790 to 1800 level. It's going to slingshot to new highs next year. I'm not in the camp it's going to happen this year unless we see something crazy in the Middle East, right? Which is very possible because gold had its best single day, October 13th, up over 3.2% that I can remember since the pandemic. So, there is a lot of new buying happening in the sector. And I would say that some of it is short covering too, because, people really got caught, flat footed here with this Israeli conflict, meaning traders.
Yeah, so I'm going to sense that a lot of short traders are probably feeling a bit of pain at the moment.
And I'm happy, they should feel pain because if you're not paying attention to the global landscape out there, I mean, I lost 4 friends in 9/11 many years ago, and I've kept an eye on the Middle East ever since. And we write about international affairs in our newsletter, the Feneck Commodities Report, on a regular basis because it really does impact the commodities sector.
How are you looking at the aftermath of this? Obviously, it's still early days, but we were sort of testing $1,800 gold just before the conflict started.
Yep.
Is this price just a knee-jerk reaction to this? Are you expecting prices to simmer down again in the not-too-distant future? I know it's so hard to predict at the moment, given it's a very dynamic situation. But what's your short-term outlook on the metal?
I look at everything pretty much in a 1 to 12 month lens. So short term for us is probably 1 to 3 months. I would say that you have some negativity out there in that you have tax loss selling coming up, I would say starting November 1st or 15th, right? That goes through the end of the year. So if people need to take gains or losses, I mean, it does pressure not only gold or silver, but also those related stocks. And so as value managers, we love that, right? Because we, again, Peter, think that that all-time highs are going to be made next year. So why not set up for that in Q4 here? If you look at seasonality of gold and silver, Q1 is really the best quarter, right? So you can go back to, choose it. The sell-off in 2020, the rally in 2016, the rally in 2011. Like it's always, January, February, March, where you see a nice move with very little, what's the word? It has a high probability of success. In other words, high batting average. That quarter produces a lot more interest in our sector. So part of that is we've got some major conferences. You've got Zurich in Vancouver, you've got PDAC in Toronto. All of this happens in Q1. I just think that the setup looks beautiful right now. And if you don't believe me, take a look at the 15 or 20-year chart of gold. I mean, it's making a series of higher lows. And I think that the most significant thing in recent history was the hold on the 1615 level, that we just saw September, October of last year. Why? Because if you remember, 1575 was really problematic to break through, right? So now the former level of technical resistance is now acting as support. So technicians love that.
How I wanted to talk to you about, you were mentioning there, obviously you're seeing this as a pretty good opportunity. I'm hearing in the market that liquidity is a real problem, and a lot of the fund managers at the moment, if there isn't liquidity in the stock, they don't want to go anywhere near it.
Good point.
Are you having the same? Are you looking at this at the same angle, or are you still seeing opportunities where companies aren't really?
I would agree with
having
that
a trading
100%. If you look at TSXV volume this year, it's the second worst I've seen it since 2000 when I got involved. So yeah, it's hard to find liquidity in a lot of junior gold and silver stocks, and for that matter, junior nickel stocks, junior copper stocks, which hopefully we can address a little bit. But I'm not selling a lot down here, Peter. I'm accumulating, So for me, I'm just being very patient out there, right? I'm sitting out there with two bids usually every day on stocks I want to accumulate. And our strategy is such that we'll get close to the bid with one smaller order and then a larger order about 8 to 10% away from the action. And on earnings, on drill holes, you name it, you're going to see volatility on those days in some of these juniors. And you'd be surprised on some of the people that will sell into you if your bid is far enough away from the action, right? So we may get filled in a small order close to, the action, but then we've got a nice sized order way far away, 8 to 10% away, and we're happy to get filled there because that's how you make alpha over over time. If you look at our performance over 8 years, a lot of that has been driven by being patient, which is really hard to do.
In terms of the type of stocks that you're looking at the moment, what sort of catalyst and what sort of news flow are you really buying into in terms of sort of future projections? What sort of stage of projects? Mm-hmm. What type of commodities? How are you going about evaluating your deal flow?
To me, there's a lot of great projects out there right now. If you look at some of the drill results this year, they were quite good. And so it's really like kind of a kid in the candy store. If you know how to pick up a phone and call a CEO and have a dialogue, you can actually garner a lot of public information. Like one of the things I like to do, Peter, is after a news release, like drill results, I'll call the CEO. Hey, walk me through this. I'm not a geologist by trade. So, help me understand the significance of this. It looks like you've got a zone over here and you've got a zone over there, and it looks like they may be connected, right? Like that's huge. That's the kind of stuff that you look for and want to get in early. And that's not insider information in any way, shape, or form. That's someone saying, yeah, I was in the field the other day. We've got drill results over here that are public. We've got drill results over here that are public. And yes, the whole idea is that we can connect these two zones, go from 1.5 million ounces to 3 or 4 million ounces, and then be relevant to an Agnico or a Newmont or a Barrick, right? Because that those guys draw the line in the sand around 3 million ounces. They want to see that kind of size from a junior before they really get interested. One that comes to mind that fits that bill completely is Cartier. ECRFF in the States and ECR in Canada. They bought a bunch of land from O3 last year, and they picked up so many kilometers of strike that they have 2.4 million ounces confirmed right now. But their press release in August was really interesting, and this is exactly what I'm talking about. The second bullet point said, this may only represent 25% of our total gold in the ground. Didn't word it just like that. Right. But then you start doing the math where you're like, hey, that's 8 to 9 million ounces of gold, and the stock's trading at 5.5 cents as we speak. So I called Philippe. Philippe's just a great leader. He's been in the business 30 years. He said, look, I can't tell you for sure, but it sure looks good right now in terms of what we're seeing in the field. When I did some more homework, Peter, the stock is heavily owned by O3 and by Agnico. So they own nearly 30% of the public float. So another thing that we do as portfolio managers to generate value is to make those calls to understand if it's not on someone's website, in this case it is, but if it's not, hey, you have 326 million shares out or whatever it is, that's a lot, right? But 30% of it is held by two major companies that have no intention of selling in the near term, right? Then you look at Philippe's position. He's not selling that. He's just growing it. He's buying alongside of us in the public market. And then you look at like managers, directors, et cetera, they own another 7 to 10% of the stock. So about 50% of the float is taken up. So then you're talking, what, 160 million shares? That's nothing for a junior. That can move very quickly. And so that in full disclosure is one of our holdings.
Yeah, I was actually in Malartic and Valdor in June. Went and saw O3, went and saw Malartic.
Okay.
It's an absolute no-brainer to be poking some holes around there, especially with Malartic coming to the end of its life and having a 40,000 ton per day excess mill capacity. It's I think there's a lot of money to be made around Agnico in that region. Something a bit more, I guess, a bit more spicy to be asking you. What type of stocks are you selling at the moment? What sort of news warrants a sell?
Sure. We don't really disclose like day-to-day selling. You know, we disclose everything on a monthly basis, which is better than some that do it quarterly, right? But I will say that we're selling very, very little here, Peter. We are accumulating, and we went into the Israeli conflict 14% cash. So, you know, we had a lot of buying to do on that first Monday, which I think was October 9th. Yeah. And we bought a ton pre-market and into the day, October 9th. Gold had a nice day. And if you remember, 10th, 11th, and 12th, the sector didn't trade well. And it was like very odd. But in talking to people involved, you know, in Israel, rather than just looking at CNN, I'm like, this conflict could get really, really wide, unfortunately. And as you've seen, it's gotten much worse. And so then gold pops on that Friday. We bought into that strength, right? Up 3.2% as a commodity. I really thought we'd get a little more love than we have today and yesterday. But of course, Biden, you know, decided to fly to Israel. I think that's kind of tempering people a little bit to say maybe there's going to be some resolution. Unfortunately, I don't think that's in the cards. I mean, I think he's going to talk to Netanyahu. They'll talk about some ways to get some aid to people that really need it, because that's fair, right? But, you know, The Israeli people didn't have a say in this matter. 1,300 people died. It was brutal. I encourage people to do their own homework and actually look at what really happened.
No, I do agree with that. Talk me through the obviously at the conference you'll be looking a bit more at energy transition, battery metals. A big part of that obviously is copper. You can't. There's no electricity essentially without copper. There's some substitution of aluminium and other things, but not really. Obviously, copper pricing at the moment, compared to the noise that's being made by a lot of the majors and mid-tiers about the need for copper,
right,
still not really as high as probably most people were expecting this time last year.
Yeah. The copper price has been almost acting like silver this year, right? Where it's just like so frustrating. Everyone's talking up copper, just like they were talking up silver last year, breaking through 30. It never happened. Copper, they were saying $5 a pound this year. Never really happened, even close. I mean, the first quarter maybe, but it's really faded all year. And that is a buying opportunity. It's one of the few commodities, along with, say, palladium, that I'm looking at to buy outright right now, because both are just, you know, palladium's in a death spiral. But, I mean, copper really looks like it will find some support soon. It's not there yet. But then look at what Goldman Sachs said in July in the Wall Street Journal, right? They're talking for 95% move in the price of copper from that print in July. Okay. So whatever it was, 3 something a pound, then they're talking 6 something a pound by Q4 of 2025. So yes, I'm interested in buying some copper because we have like a hub and spoke structure in the way we design portfolios. But you know, it's less interesting to me to buy copper. It's more interesting to me to buy copper juniors, right? Because there's so much upside. We like Copper Lake right now is literally trading at just over a penny US. I found this stock 3 years ago when the copper rally had started in 2020. I called Terry McDonald. I had no idea what the company did. They got bombed out by a major who owned a lot of shares. Not unusual, right? Majors change direction all the time, as you know. They get rid of something and they don't do it in a very discreet way. That's an opportunity for any junior or any buyer of juniors to say, let me call the CEO and see what happened here, right? This thing went from 4 cents to 1 cent. What the heck happened? And it wasn't a situation of near bankruptcy or anything like that. It was simply, hey, we were really fighting the tide here. They have a really wonderful project in Canada called Marshall. Marshall is gigantic. It hadn't been drilled really since the 80s. They put some holes in it. If you look at the news flow in 2021 and 2022, and the stock went from 1 cent to 16 cents, it is now trading back at little over just 1 cent. So we call that an upside down V, kind of looking chart where it's a completely mean reversion, right? It's all the way back to where it was. Does that mean it's still worth a penny? Absolutely not. They've done a lot of work there. They've got, some really interesting geos on their board. Anyway, I just think that stock is representative of what's happening in Copper Juniors right now. Another one that we just bought yesterday is VR Resources. Man, these guys have a good copper project, but then you look at what's happening in their Canadian diamond project, which diamonds are not my strength. But I did about an hour of due diligence to understand how significant this may be for a junior company to be kind of on the verge of a first discovery in Canada for diamonds in decades. This isn't like, there's 20 different companies doing this, right? So to me, at 4 cents US yesterday, VRRCF looked like a screaming buy. And it had hit, I think, 21 or 22 cents just a few months ago. So again, look at that percentage move, Peter, right? Like, it doesn't have to get back to 21 for us to make a lot of money. If it goes from 21 to 4, we buy it. It goes to 8, we make 100%. I mean, it's like, this is why I'm saying there's just so much disconnect right now in the junior space. A last one I'll give you, because I do like Copper Juniors here a lot, as you can probably tell. World Copper is one that I think is getting completely overlooked by the market. They have 2 advanced stage projects. One is in Chile. One is in the U.S. here in Arizona. Either of those projects is worth, just under 8 cents US where the stock is trading right now, in my opinion, because both are PEA stage, right? That's called a preliminary economic assessment. To get to the PEA stage, you got to spend some money, right? So both projects have shown some really decent economics. And I think the company is just understanding of the fact that they're waiting, they're kind of biding their time, just saying, look, we're not going to go out there and drill a ton right now. We're not getting rewarded for that kind of news flow, which I think is prudent. Let's just hang on to what we have, and then in 2024, let's do some more stuff in terms of news releases, which I think is a good idea.
I wouldn't mind touching on the nickel market as well, because that's something I've been looking into a lot recently, sure. And it's bewildering when you look at battery chemistries and the uses of nickel and the projected demand forecast. Why nickel? Again, when you look at the junior space, there just seems to be no appreciation whatsoever for what's in the ground.
No.
What's driving this?
I don't know. Nickel is one of those very unusual commodities that, is a bullish commodity. It's an industrial commodity. So, I think that could be part of it, Peter, is that the market, there's like a large contingent of people that think we're going to have a soft landing. There's a large contingent of people that think we're going to have a hard landing. And so if you're in the hard landing camp, you're not loving nickel, right? I mean, I don't think that goes hand in hand. But the soft landing camp doesn't have a lot of conviction either. So it's sort of like, it's sort of just hanging out this year as a commodity. But look at the 5 and 10 year chart. You have to look at where nickel has come from, which is, the chart looks beautiful. I mean, it made some really nice moves in the last couple of years. And I'm encouraged that we're going to get back to some of those prices over the next 2 years. Look at what if you don't believe me, look at what Elon Musk is doing with Copper Juniors, right? He locked up some future supply with Talon Metals. He's done this with a bunch of nickel juniors, where he's talking to companies that I'm friendly with the CEOs, and they're telling me, hey, we had Musk approach us, or the guy from Tesla approached us at this conference. And I'm like, interesting, So I think there's some more love to come there. We personally love the nickel junior space. We've made a lot of money there. The first success story we had, Peter, when we launched our company 4 years ago, was FPX Nickel. FPX Nickel. I met Martin at the 2019 Beaver Creek show, and it was at 10 cents all day long, and it went to 70 plus, and then he got analyst coverage, and now it's faded to 25. So we're almost ready to buy that again, because the chart tells you it could hold this 24 to 25 level. If it doesn't, it's going to go probably, to 20. So, I mean, there is some downside risk. But again, here's 70 or 75, here's 25. My downside being 20, I can live with that. My upside is larger. Another one that I like even better is Stillwater Critical, which is PGEZF. PGEZF is so undervalued right now at 13 cents on the nose. I say that because I have a lot of respect for Robert Friedland and what he's done in the space. South Africa is a challenging jurisdiction from time to time, and Stillwater took on two of his main geos 2.5 years ago. Very quiet press release. I've had dinner with these guys. They are rock stars when it comes to understanding, that they may have a Platte Reef deposit here, and that type of deposit is rare in the States. This is a Montana project. They're a mining friendly jurisdiction, but the best thing, Peter, is they're attached to Sibanye. So Sibanye is a major producer, as you know. They are producing at the Stillwater complex right now. And so if nickel prices go up, if rhodium goes up, if palladium goes up, all of that, we call that the basket of PGMs, right? If that basket goes up, which I think it will next year, then, someone's going to make a bid eventually for what they have, just because they just got a 9.9% investment from Glencore. So that was 3 months ago. So again, nice endorsement from a top 3 commodity player.
No, screams strategic asset in terms of the type of mineralization that it has there. I wouldn't mind asking you a little bit about what catalyst you're waiting for to see a market turnaround. Are we waiting for a collapse before a return, or how are you looking at how we get out of this slump in the junior mining space?
Yeah, the disconnect between the price of gold, we started with that, to the price of gold producers even is extreme. But then when you look at gold juniors, it's ridiculous. I mean, I want to be careful on how I say this. I don't think there's been a time in near-term history that it's been this bifurcated, but I think that if it has, let's say it's the second worst time, it doesn't matter. You need to buy. You need to do some homework as a listener and just buy some things, because if I'm correct, a lot of these juniors are getting naked shorted, meaning that short interest is going to happen between the time that someone has to report that, which generally is around the 1st and 15th of the month, right? So someone shorting the stock on the 2nd, 3rd, 4th of October, you're never going to know, because they may cover it on the 13th, right? And then you look at the short interest, you say, man, this thing's always getting crushed. Who is, what's happening here? There's definitely some short selling in the mining sector right now. And that's part of what will get us out of this. If you look at January of 2016, the conditions felt just as dire as right now. I would argue even worse. I remember getting filled on CDE at $1.25, AG at $3. I mean, I was getting filled on way lower prices than today. And I would call those CEOs and say, man, how did I even, how is this down 10% today on no news? And they were just clueless, right? It's like clueless in a way that they just had no idea where the selling was coming from. But when you looked under the hood and looked to a Bloomberg terminal, you saw where the selling was coming from. GDX in January of 2016 was more than 20% short at one time. And that's when we got really interested. That's when I made like 30 CEO calls to people like Keith at AG and just said, hey, tell me about something that I'm missing here, because I'm ready to put some money to work. And we had our best year ever in 2016 as a result.
Good. Okay. Just to tie things off, I mean, what give us a bit more of a flavor as to what you'll be talking about at the Precious Metal Summit. I'll be in attendance, and we'll be catching up afterwards and hopefully going into a bit more detail. But what sort of message do you think people should be expecting to hear there?
So it's going to be a panel with myself, Gianni Kovacevic, who is the former CEO of Faraday. He is currently involved in a new project, Lithium Bank, which is pretty interesting. Then Scott Melby, who's the CEO of Uranium Royalties, UROY, I believe it is. Yep. Scott's going to talk mostly on uranium, obviously. Gianni will talk mostly on copper and lithium. I'm going to talk on nickel and copper and palladium and platinum. And Jamie Strauss will also be there. And I'm not sure how we're all going to fit into this for 35 minutes, but it is going to be something where clients can ask questions afterwards, and not going to get to all these issues that exist in the world in 35 minutes. So, personally, I can't speak for them, but I'm happy to take any questions after the conference is over November 15th.
Perfect. Well, I'll tell you what, I'll put the conference details down so people can attend, and I'll also put your details down so people can ask you some questions following.
That'd be great.
John, thanks very much.